welcome to Making Sense of the Budget for Business Owners in the Real World. And I think it's the in the real world that is actually so important here. So thank you all for joining us today. Welcome to people that I haven't met before, and hello, nice to see you to the people I have met before. So for those of you who don't know me, I am Julia Blake and I help businesses grow. And I started Stronger Together almost a year ago, 50 odd weeks ago. We're nearly at that 1 year milestone. And I started it because I wanted to help as many business owners survive as possible. It wasn't a case of growing at that point, was it? It was about surviving. And to date, we've helped over 1,100 businesses through sessions such as this. So thank you all for being part of this. It's been a brilliant journey, and we carry on the journey. It's not stopping. We are going to carry on being here for you all. And I'm very pleased to say that today I am joined by Tory, who has been on this journey with me from the start. Tory's been one of the panelists helping so many business owners through this as well. She's been tireless in the way that she's helped people. So I'm absolutely delighted that she's with us here today. And Tory is an accountant and a business owner, and her team specialise in helping small and medium-sized businesses. And what I particularly like about Tory is that she makes sense of all of these things in a very sensible way. So I'm absolutely delighted that Tory's been able to join us today. Now, Tory does need to dash off for a number of personal reasons at 12:45. So we are aiming to keep the session running to time, and there will, however, be time for questions at the end. So do jot down any questions that you have, and we will certainly try and answer those questions. So let's put this into context, shall we? At the beginning of 2020, there were 6 million private businesses in the private sector. 5.94 million of those were small businesses. And I'm looking over to the side because I've got all this written down on a very big bit of paper. So 5.94 million of those 6 million businesses in the private sector were small businesses, defined as up to 49 employees, up to in that sort of area. Of those 5.94 million, 4.6 million had no employees. Okay, so that really does put it into context, doesn't it? So I'd be really interested to see who we've got here today and where you guys fit in that. So also want to say this is a meeting, and of course if we were in an actual meeting actually seeing people, then we'll be introducing ourselves to each other. So do feel free, if you'd like, to put your LinkedIn profile or your name in the chat, and people can connect with you after the event during the questions answer, for example. But do feel free to introduce yourselves, because it is about getting to know other business owners as well. Who do we have on this call today? So I want a little show of hands, rather than, I'm not going to do a poll because polls take quite a long time. So hands up if you are self-employed. 1, 2, 3, 4, 5, 6. Okay, so 6 self-employed. Okay, and 7. How many people here are directors of limited companies? 12. Okay, excellent. How many of those directors of limited companies have more than 5 employees? 2. Okay. Thank you, Tory and Tobe. And how, right, so I'm presuming everybody else is an owner managed and you're the only employee, like I am. Yeah, okay, brilliant. Excellent. How many are service-based?
Yeah.
Okay, and how many product-based? Okay, excellent. So we have a good range of business owners today. So thank you for that. It really does help us put into context, because of course there's so much in the budget, isn't there? 101 pages of stuff. I got the condensed version and I've been through it, and it's 5 or 6 pages, but I've got 101 pages. That's just, I'm not going to be able to go through all of that, but that's why we have Tory here. So that's fantastic. So The budget has been described as the budget with the most interest for a generation. And of course, all of these big numbers about the borrowing and all the rest of it are just absolutely ginormous. And we're not going to spend time on that because it, quite frankly, blows my brain. So we are looking to see how it affects us in the real world. And it has been described, of course, as a budget of two halves. And my perception of that, or my understanding of that, is that it's about the budget now, what it means for us now, and what it means in the future, which as business owners we need to be on top of course. So we also, as business owners, have to see it in two different ways. We have to see it from our personal perspective and also from how it affects our businesses as well. So as a business owner, we've got quite a lot of different angles to look at this budget from. And that's why I have invited Tory to come. But the things that stand out for me, and these are just literally the things that have just shouted themselves out to me, is the furlough scheme is being extended, and as is the SEISS until the end of September. But if all adults are going to be vaccinated by the end of July, why is that? That sort of slightly concerns me. So there's restart grants, and there's VAT cuts, and there's business rate relief for certain industries, which is fantastic. Personal allowance isn't moving up until 2026. That's a concern for myself as a director of a limited company, other people here as well, I'm sure. So I'd like to explore the element that we sometimes are able to get money out of our business to pay ourselves with dividends. That's an interesting one. Perhaps we could have a chat about that. Corporation tax, my goodness, media hype. Corporation tax going up to 25% in 2023. I literally just, my jaw dropped. And then you look at the small print and then you see, actually, it's only for those that have profits for over 50,000, tapered up to companies, organizations that have profits of over 250,000. So that makes it a little bit more sort of palatable. So that's something to explore as well. And then there's the wonderful Help to Grow scheme. Well, that sounded exciting, didn't it? Turns out that you have to have 5 employees to be part of the Help to Grow scheme. So that doesn't help a lot of us and many of us on this call today. So all sorts of things. And we all, of course, understand that this has to be in context of the wider issues out there. But it's, I think, quite difficult to find some positive things to come out of the budget for us. But if there's anybody that can find those positive things, it is Tory. So again, I'm absolutely delighted to have Tory here, and very interested to hear what Tory makes of the budget and to share it with us. Thank you, Tory.
Thanks, Julia. That's a lovely introduction to be the person that can bring the positives out of it. And I think you're right. I think there are some positives to find here. It would be quite easy to really focus on the tricky bits that came out of this budget. And you're right, some of the numbers are enormous that we're talking about. And there are some things coming further down the line that could be quite difficult for business owners. But what I'm going to start with is focusing on those things that we can, as business owners, take from the budget to use to our benefit. Well, let's start with the corporation tax question. So for those of you that are in limited companies, corporation tax, the headline is, from 2023, we're going to see a corporation tax rate of 25%. Now, we've been at 19% for some time, and we've become, definitely us accountants have become quite used to it being very straightforward. It's 19% of your profits. You know, what's complicated about that? Well, it's going to get complicated because we're going to end up with a 19% rate for profits under £50,000. For many people, that's not an awful lot of profit, to be honest, going up to this £250,000 rate where it's going to be 25%. And there will be a taper that goes between there. So when people ask us in 2023, how much is my tax bill going to be? No longer can we take out our generic fag packet and scribble it on the back, which is something we've got quite used to being able to do. It's going to mean some calculations in the background. So it's worth just keeping that in mind, that it's going to be a change in the way that we think about how much tax do I need to pay, and it may be a complicated question for your accountant to answer for you. Having said all of that, April 23 is a little way away, and there will be an election the year after that. Just keep that in mind. Tories have not me sort of Tories, but Conservatives have a bit of a habit of playing the hike the tax rate so we can bring it down in time for elections. So it may be that we never get to the 25% rate at all, which is what I've been saying to my staff is, let's just park that problem for the moment. It's 2 years away. Let's concentrate on what we can do with corporation tax right now. And so my first top tip, my first giveaway, is the super deduction. Now, you might have caught some bits about the super deduction from the budget announcement, and what it is a rate of allowance against corporation tax, or also for those of you that are sole traders or in partnerships, it also affects unincorporated businesses. So it works for everybody here. And the super deduction says that, let's say we spend £20,000 on some machinery for the business, then we'll be able to claim not just the £20,000 against your profit in that year, which is what your annual investment allowance would have allowed you to do. You'll be able to claim 130% of that against profit. And that's going to be in place for 2 years. And that's a real giveaway for small businesses, actually. So yeah, go on, Julia.
Is that just for machinery then, or does that include equipment and the likes? Assets? Is it assets?
It's assets, plant and machinery in the commonly used term that would have fallen under annual investment allowance or writing down allowances at 18%. So if you've got the sort of things that you would have spent on, so that might be things like laptops, printers, computers, those kind of things, then you will be able to apply the super deduction to them for the next 2 years. And what that's going to mean for business owners is there's going to be some planning needed around when and what sort of things you need to buy. And if you did have a longer term plan that said, right, in year 3, we're going to buy this big piece of machinery that we need, you should be looking at bringing that forward so that it falls under the super deduction, because it's just worth so much against your corporation tax or your income tax, if that's applicable. And the reason I point out that it's what would have been under your writing down allowances at 18%, your plant and machinery, is that there's also a secondary rate for longer term assets that would normally have been written down at a lower amount, and you can claim those at 50% rather than the smaller writing down allowance. So that there's a little bit of intricacy around that, but the sorts of things that service-based businesses, which most of us here are, might be spending on is typically going to be computers, those kind of assets. And my understanding at the moment, and we're still just looking for a little bit of clarity on this, but at the moment, if you perhaps were thinking about buying an electric car, so electric cars have been falling under the annual investment allowance scheme. I can see thumbs up from Richard. So you would have been able to claim 100% of that against your corporation tax. Really tax efficient thing to do right now. You get 130% of it if you do that in the next 2 years, which is amazing. Electric cars I like to point out particularly, partly because I drive one and I think they're ace, but also because there's no benefit in kind tax right at the moment. You're going to pay 1% benefit in kind on the value of it. So really cheap way of getting cars to business owners and perhaps employees, and for us to help move that away from the dirty petrol and diesel stuff, which is another one of my little waves, flags I like to wave if I can. So yeah, Julia, ask that question.
Yes, so Charlie's asked if that starts in April, or does it go back?
April, I believe. So two years from April. Although somebody did ask me a question yesterday saying, "Can I do that from today?" And I don't have the answer to it. So, again, at this point, straight after a budget, sometimes there are these bits that just haven't been clarified yet, or we're still going through the small print. But I can definitely check that out and pop it into the Stronger Together group.
Thank you.
So that's one of my top tips. So just keep that one in mind. 130% deduction for that kind of investment spending. Coming away from the corporate tax and the profit-based tax questions, my next area is this furlough extension that Julia picked out for us. So in some ways, it's really good news. We've got an extension on the furlough scheme, still at the 80%, carrying on to the end of September. And that's 80% of what your employees would have been paid for the hours that they can't work or aren't working because of COVID-related issues. We have had tapers down on that towards the end of last year. So it's staying at 80% for the employees, which is good news for them. For employers, no extra cost to you outside of how furlough's working right now, which is the employer's NI and the pension contributions. So it stays at 80%, and from July, employers will have to put in 10% of that, and then in August and September, employers will have to pay 20% of that. So it remains a scheme that will really help people where they can't get their employees back into work. But Julie, your question was, if we're out of lockdown and we're all vaccinated by the end of July, why have we still got a furlough scheme running to the end of September? Now, my understanding is because if we think about a business where, you know, that it's really not been able to trade at all, so perhaps something like, I'll take one of my examples, which is I've got a theatre company, so really no trade at all. It's going to take time from when things start to open up for all of their staff to have enough work to do. So I can quite understand why maybe in July and August they'll have some admin staff only working 50% of the time, and it'll just take that time for the cash flow to come back and for the work to come back up to a normal rate. So with my positive pants on, that's why I think we've got furlough going till September. The other side is it's because it's not going to quite run to the time frame that we're looking for. And either way, I'd applaud the government on that particular decision, because it means that if we do have to stretch out that timeline for the right reasons, because we're not getting as far as we thought we could, we don't have to write some more legislation to protect people. It's easier for us as accountants to say to our clients, it's all going to be okay, because we've got a little bit of scope and stretch available to us to get you through to the end of September. So it makes planning so much easier. So I think, again, that furlough extension is a bit of a giveaway for businesses. So that's another positive to take out of this budget. For those of you that are self-employed, and I think, Julie, I can't remember how many, it's about half and half, something like that. For those of you that are self-employed, the SEISS, the Self-Employed Income Support Scheme, it's a bit of a tongue twister, is remaining for phase 4 of the grant, which is what we were expecting. That's going to be open late April, so you can't, and it's covering February through to April. So we know there's been a bit of a hole for those people, that you're going to get paid really towards the end of the period for which this is meant to help you. But that's remaining at 80% for the 4th grant. And for the 5th grant, I think quite a sensible application for the 5th grant, actually. If you can show that your profits have dropped by 30% or more, you still get the 80% SEISS grant based on your profits for the years that now include the tax returns we've all just filed to the end of the 1920 period. And so what that means is if you weren't eligible previously but had been self-employed during 1920, you now get picked up into the scheme. So those people that were newly self-employed during 1920 now do get covered. And there were other people who had fallen out of the scheme for other reasons. There are quite a lot of eligibility criteria for the SEISS. And all of that eligibility criteria have remained, but it may be that your circumstances in 1920 allow you to now be able to take the grant, and you can do that for the 4th grant, assuming you did file your tax return vaguely on time. If you didn't do it before the budget, you still you can't go into the scheme. So those people that were late and still haven't filed aren't going to be able to use the scheme. But for the 5th grant, if your profits have fallen by 30% or more, yes, you get the 80%. If it's a smaller decrease in profits, you're going to get 30% of what your profits would have been. So those people less affected get a smaller percentage. So hopefully that covers out the SEISS. Were there any questions about how that's working for anyone? Are we all okay? Yeah, good. Okay. A quick little aside for those employers in the room, if you are in that smaller employer group, and there are only a couple of us with more than 5 employees, for apprenticeships, there's a larger bonus for taking on an apprentice, and this is between the 1st of April and the 30th of September this year. If you take on an apprentice in that period, you get a £3,000 bonus check. So for people that have been thinking about taking that route, now is the time to do that. It was £1,500 before the 1st of April. So it's a big jump up. And don't forget that an apprentice doesn't have to be what you may typically think of as an apprentice, a 16-year-old straight out of school with no skills. That you're going to have to skill right up. Apprentices can be in all sorts of industries now. In fact, in accounting, you can have an accounting apprentice who I've got one at the moment, and she's over 50. She won't kill me for telling you that, and still counts as an apprentice, and you can still use these schemes for them. So if you think that might be applicable in your industry, go and have a look and see if you may be able to use that scheme. Go ahead, Julia.
Yeah, Sophie's got her hand up. I think she wants to ask the question.
I was a bit confused about the employment support, self-employment support scheme, because if it's going on our last tax return, which was the year 2019, that was the year when all things were well and good before the pandemic hit. So I don't understand how they judge the criteria of if your profits have fallen. Does that make sense?
So for the 30% decrease, for the year, so what's happening is they're not going to say have your profits decreased in the 1920 year compared to the 1890 year. They're going to ask you that question and say, has since the 6th of April 2020, in that period, is that lower by 30% or more than the 1920 year?
Do you need to file another tax return come 6th of April to do that?
Now, I don't know if they're going to say we've got to be able to see it, or if you're going to self-certificate like you have done in the past. So up till now, you've ticked a box, haven't you, in your application to say, yes, my profits have fallen, or yes, I've been affected by coronavirus. So my understanding is that the 5th grant is again going to say, can you self-certificate that your profits have fallen by 30% or more?
Okay, thanks.
Does that make sense?
Yeah, kind of.
Julia, did you have a question to ask?
Yeah, I know that we said the Q&A at the end, but sometimes it's easier to ask them whilst in the conversation, so apologies. But just a question about the apprenticeship scheme. Do you know when that is starting from? The question, somebody's got an apprentice starting next week.
So my understanding is it's if they do start from the 1st of April, and if it's before that, it'll be the 1,500. That's an expensive couple of weeks, isn't it?
Can I ask a question?
Yeah.
Yeah, I mean, if I'm using sort of independent outside people to help me at the moment, would there be a logic in actually taking them on as an apprentice from April and claiming that allowance? I mean, is advantages, disadvantages?
Yeah, it definitely could be worth looking at. Don't forget that an apprentice comes with obligations from your side. So you must give them, for example, 1 day a week of training, and that can be on the job or off the job. And then you've got all of the employer obligations that come along with it. So you've got national insurance contributions, pension contributions. Having said all of that, I think there's something wonderful about having an employee that you can bring through a training scheme like that. So it's definitely worth investigating further. Yeah, I would say so.
Okay, thank you.
Great. Okay, so I'm just going to move. I've got my little list here, so I don't forget to tell you anything. Do we have anybody in tourism or hospitality on the call? If we don't, I'm going to. Janet, is that you? Yes. Oh, and Catherine. Great. Okay, fine. So VAT changes for tourism and hospitality. So if you're VAT registered and you're in those areas, the VAT rate remains at 5% for you if you're eligible, and there are some criteria around that. So it's going to be 5% until the 30th of September, at which point we go to a transfer rate of 12.5% until the 31st of March 22. I have to have some of these written down. I can't keep them all in my head anymore. Which means there's going to be some complicated bookkeeping for you guys. So it's definitely something to stick in your diary and say, don't forget to change my VAT rate. And we're going to have a 6-month period with the 12.5%. It sounds like an odd amount. The reason we use these 0.5% when we're talking about VAT, it's very old fashioned, but it's easy to do 10% and then halve it to 5% and then halve it to 2.5% and work it out manually, which is why we always find our VAT rates are at 20%, 15%, 17.5%, these kind of things. So that's the historical reason for it. And so that's there to help those guys in the tourist and hospitality areas have this slower tail getting back into full trading, but it will go to 20%, we assume, from 1st of April 22. Business rates relief, anybody in the room that pays business rates? Is everybody under small business rate relief or don't have premises? Fine, we won't worry about that bit. Business losses. There is, this is my number 3 giveaway, so you just want to keep a little eye on this. It's very likely that we're going to see businesses that have made a loss over the last year or in this year, depending on when your financial year ends. And this is applicable for both limited companies and for sole traders partnerships, LLPs. Useful for everybody in the room. If you have a loss that you've made, usually you're allowed to carry back that loss for 1 year. And what a carryback of a loss normally means, let's take a limited company as an example, is that if you made a profit last year and paid corporation tax and you made a loss this year, you can carry that loss back, match it off against some of the profit from the year before and ask for the corporation tax that you've paid to be paid back to you. So it's a cash flow bonus for you. It's actual money in your pocket. So usually it's a year. That has been extended to 3 years. So you can carry back that loss. Let's say your loss is quite large, larger than the profit that you had in the previous year. You can carry it back for up to 3 years and ask for that corporation tax back. You may need some help from an accountant to do that. It normally means filing amended corporation tax returns, and there's some other bits and pieces that go alongside that. But it's definitely worth considering. So rather than just carrying that loss forward and dealing with it in future years, have a look at the carryback process. Also applicable if you had profits in the past as a sole trader and you've now got a loss or you're about to have a loss. My tip around that is, as always, the faster you can do your accounts, the quicker you can make the most of these kind of carrybacks, capital allowances. And the thing that normally holds people up from doing this quickly is that their accounting records aren't in a state that are easy to finish off. If you're still keeping records on paper, you should be looking at digital answers to that. You're going to have to in a couple of years for making tax digital anyway. Make the change now, it does make it easier. When you're coming up towards your year end, you should be having conversations with your accountants about what can I do with my capital allowances and how quickly can we get this done. So if we do need to carry back losses, we get that cash back into our business so we can use it. And so that carryback, which is not the most glamorous of the budget announcements, is possibly one of the most useful ones. So just keep a real eye around that one. I have got 2 more things. Go ahead, Julia.
Can I ask a question on that? So as far as profit and loss, where do, and this may be a really daft question, but I'm struggling to get my head around it. So I'm sure there are other people who are too, but as far as bounce back loans, that's going to mean a company is not in a loss situation that would have been, and the same with grants. How are grants and bounce back loans accounted for in this situation, please? Okay,
yeah, good question. So 2 very different things. The grants, let's take them first. The grants are taxable, so they show up as income in your profit and loss statement. And I think we're going to find a lot of people confused by this when they start to have to actually pay tax on it. We talked about it a lot when it first happened. And it's the same for, so you might have the small business rates relief grant, or you might, if you're self-employed, have the SEISS. Both of those things are taxable. They are going to go into your profit and loss account, and you are going to pay tax on them. And I think it's really important we keep a focus on that, because yes, that is definitely going to have a difference. So it may push you back into a profit-making position and you won't have a loss to carry back. Bounce back loans and CBILS, different. They aren't income. They are a loan that will be repaid, and they therefore turn up on your balance sheet. So they don't turn up on your profit and loss account. They turn up over on your balance sheet. I'm going to do a quick infomercial at this point. I'm running a bolstering your balance sheet webinar on Monday to explain a little bit more about what your balance sheet is and how it works. So if when I said balance sheet, you went, oh, I don't like it, don't understand it, come along on Monday and I can explain a lot more about it then. But yes, so the bounce back loans and the CBILS over on the other side, and they're not going to affect this part for carrying back losses. Does that make sense, Julia?
Yes, and it's important, isn't it? Because if you've got a bounce back loan, then obviously your bank account looks better, it feels better, and then you that may end up in your income, in your sort of revenue area, you know, and then you have to remember to take that out. So being able to claw back some of the profit from previous years, excluding that, will be quite valuable for people, won't it? Okay, thank you.
Yeah, and while we're talking about loans, there is a new set of loans coming up, because the bounce back and the CBILS loans finish at the end of this month. So if you were intending to use them and you haven't done that yet, or you were going to ask for some more from your CBILS loan, you need to do that by the 31st of March. So you haven't got very long to get that sorted out. But there will be a new set of loans coming from the 1st of April, again backed by the government with 80% of that covered. I'm hearing on the grapevine that lenders are not going to be very keen to offer them because they're only 80% covered, and they're already quite exposed with all the people who've already asked for money. So although as a headline it sounds good, I think it's a watch this space and see what actually happens in the market. Again, if they're going to be like the CBILS loans where the rate could be set by the lender, I'm expecting some quite high rates as well. So maybe not the best answer to the problem, although if it is just a cash flow hole that you've got and you can see how you're going to cover it, they may be applicable to help people to get through that next period. Alternatively, we may see the government forcing lenders to be better at getting these out to the market, because they were not thrilled with how CBILS was used by the banks in the end. So there's a little bit about loans there, but I think there's more to come, and it's still a bit of an unknown area. Help to Grow. So the Help to Grow announcement was quite a big flashy one, and as Julia has pointed out in the small print, as always, there's a little bit of a bite for the SMEs in the room that you had to have 5 employees or more to be able to use the Help to Grow scheme. So for lots of people here, it's not going to be applicable. One answer, you're absolutely right, go and get yourself 5 apprentices and you can suddenly use these schemes. As to quickly cover what Help to Grow is, 2 schemes within there. One of them is about management. So that is a £750 course, which is like a mini MBA that people can go on over June. I think it's June and July time. And you'll get peer groups, mentorship, and this MBA. One person yesterday did say to me, I'm a bit concerned that the government's paying £7,500 per person, because they're saying it's worth £7,500. But for a course like this, which is part-time and over a shortish period, it sounds very expensive to me. But it is there. But again, you have to have 5 employees or more. And the other side is the Digital Help to Grow, which is some free resources and then some matched funding. So this is where you pay out for something, and in this case it's probably going to be software or something to help you on the digital transformation route, and then the government gives you 50% back of it, up to £5,000. All sounds really good, except when you start to think of companies that have got 5 employees or more, they're probably already on their digital transformation progress. They've probably already got this in place for accounting and finance, which is one of the areas we were thinking it was going to be really helpful for. So again, the government is saying it's going to help about 130,000 companies. It's not as big as it sounds. So it's a little bit of a, I'm not sure it's the giveaway that we were hoping that would be. I think, Julia, that is my list. So let's ask some questions.
Yes, thank you. So does anybody have a question that they'd like to ask, either one that they brought with them or one that has come out of the session? Yeah, Jonathan?
It's just a simple one. I'm presuming that mobile phones, which nowadays can cost about as much as a computer anyway, fall into the same sort of category as computers for that tax benefit you mentioned.
Yeah, absolutely. So as far as I'm aware, I haven't seen anything that says they will be excluded. I cannot see why you wouldn't be able to use that with a super deduction. So that would definitely count as one of the ways that you can make the most of that regime.
That's a good question. Thank you, Jonathan. Okay, so I did have a question from, Richard has a question.
So if you don't mind, more of a comment than a question. From the financial services world, there was this freezing of the lifetime allowance, and most people don't think it applies to them at all. But I could just, for the record, if you have a pension fund which is worth more than, say, 500,000, even if you're years away from retirement, you do need to look at that and get some advice on it fairly quickly. It can hit you without you realising it. And secondly, the thing that the budget didn't do was remove higher rate tax relief on pension contributions. But there's a committee of MPs that are really pushing the government very hard to do that. So I don't think it's going to last very long. If you're a higher rate taxpayer, particularly age 45 or more, that should be really, really part of your tax planning exercise. And finally, I love my electric car. I think for a small business person, that is the most effective tax planning you could possibly do. Running a little lifestyle business and not particularly interested in profits, to have my car run by my business with a minimal benefit in kind and paid for by the business just is so exciting. I love it every time I get into it.
That's great to hear, Richard, and I absolutely endorse those points about the pension planning. One thing I didn't mention is that there was so much stuff that didn't change in this budget. So we had no changes in personal allowance rate. It's going to be £12,570 for the next 5 years, and that is in effect a tax hike. The government can't give us any tax hikes because it's promised not to, but by freezing all of our personal allowances and our rates, inflation will drive us up. That's called fiscal drag, and it is an effective way of increasing tax without having to tell anybody that's what you've done. So what you will feel in your pockets over that period is you'll have less spending power because inflation is degrading what it is that you're getting. And as your companies grow or your businesses grow and you make more profit, you will get forced up into a higher rate bracket before you would have done otherwise. So don't believe that being told that everything's been held as it is means you'll have the same money, because you won't.
And just on that point then, Tory, other ways of getting money out of your business in an efficient way, traditionally that's been dividends on top of that threshold. They changed that relatively recently to have an amount of money in dividends at a certain rate and then another amount. So how has that changed, or how does that currently look?
No, so the dividend rate has remained the same in that the first £2,000 of dividend is tax free, and then you go into paying dividend rate of income tax. So this is personal tax that you pay once the company has already paid its corporation tax. So dividends come out of post-tax profit from the company, and that remains at 7.5% if you're a lower rate payer, and it goes to 32.5% if you're a higher rate payer, and then a couple of extra brackets above that. So no changes at all is my answer on that one, Julia. It does remain a tax efficient way of running your businesses at most points. There are a couple of marginal points, and especially if you've got a much smaller business where it's cheaper to have it running as a sole trader than as a limited company. And as soon as we get into this taper relief area from 23 onwards, the answer is I'll have to do the workings. And I hate that, because I really like to be able to say it's this or it's that, but I can't, because it's going to get too complicated to do it like that. So it's going to depend on where your profit sits. And there will be a few places there where you are worse off taking money as dividends, because you're going to be paying that higher rate of corporation tax. So yeah, it's a run it through a calculator and let's find out.
Yeah, absolutely. And it really is a case of just being on top of your numbers, isn't it? And making sure that, I mean, I didn't know about the electric car, and I'm looking to change my car. So that's a massive takeaway from me today, but it's also a way of getting money out of your business, isn't it? It's
absolutely,
yes, doing that efficiently.
It's very efficient to bring your profits down in the business, and the other side of it is you're not going to get hit by a large benefit in kind tax.
Yeah.
I think Mitt and then Richard.
Oh, and yeah.
Oh, yeah.
Sorry, I was so off the mark when you talked about business rates and business rates relief, not through our company, but through another personal interest. I would like to hear what you had to say about that.
Yeah, sure, no problem. So business rates relief, we've got for eligible retail, hospitality and leisure properties, they've still got the 100% rate relief until the 30th of June 2021, and then it's going to 66% rate relief until the 31st of March 2022.
Okay, thank you.
No worries.
Janet, did you want to ask her? Is it Janet next?
Yeah, perfect, thanks. So a quick question. We're building down our garden a garden room, as many people are, and I know that can't be set off against the business, but that fixtures and fittings and things can. Would they be eligible for this 130%?
Yeah, so your fixtures and fittings, yes, you're absolutely right to be cautious about the garden room thing. It needs to belong to you because it's part of your personal property. But the fixtures and fittings, if you wanted to fit out, put new desks in, that kind of thing, yes, you'll be able to use the super deduction. So 1st of April onwards.
And does that apply for, my accountant told me that having somebody in to do all the lighting and the electrics and all of that sort of stuff could also be tax deductible. Would that be eligible for that 130 as well?
Yeah, can't see why it wouldn't be. Again, I just run it past your accountant before you do it, so you can just have a double check. There are some, you get into these very odd bits about, is it part of the fabric of the building or is it something that's separate? And if you wanted to move, would you take it out? And it's a conversation to have, but generally, yes, it's worth having a look at, and I think you probably will find that you can claim it.
Lovely, thank you.
Thank you, Janet. Richard, did you have a question?
Again, sorry with comments, but just another comment in terms of extracting money from your business. I mean, if you're over 50, one of the most effective ways of extracting money from the business is certainly that pension contribution, because now you can extract money from your pension fund from age 55 onwards. It's no longer a pensions plan, it's just a tax efficient savings plan, and one of the best possible ways of getting money out from the company. Doesn't work as well for a younger person, because if you've got to tie the money up for 15 years to get your tax relief, it's not exciting. But if you can do it and keep access to it within a couple of years, mind-blowing.
Yeah,
thank you, Richard. Anything that makes it feel better to be over 50 is good by me, I can assure you. And I'm happy again.
Especially with that higher, if we're going up to 25% corporation tax, that's an absolute win.
So thank you so much. I am conscious of the time. I know that Tory, you've got to dash on for personal reasons. I would just like to say a huge thank you to you. It's been a really good session. We did a budget session 6 months or so ago, and it ended on quite a low, wasn't it? It was sort of, what can we do? But actually, this seems more positive. So thank you so much. Tory, do let me have the link for the session, the balance sheet session on Monday, and I'll send that out to people. And I'm sure you'll put it on social media as well. But everybody do join the Stronger Together group, and then we can tag each other, connect, etc. And Tory's going to answer that question in the group as well. So thank you so much, everybody, for joining us this morning. It's been a brilliant session, and look forward to seeing you all again soon. Enjoy the rest of your day.